Before we begin with today's market analysis, I would like to mention our new channel membership options. This is a special introductory offer which will open access to members-only trading strategy videos that are based on high-value, high-conviction investment strategies and are characterized by superior risk-to-reward metrics that target massive, market-beating returns over time. Please note, this is a limited time offering of just $9.99 per month, but members that sign up during this introductory period will be able to lock in this new low rate for the entire duration of the membership. Again, this early sign-up period will allow you to lock in this low introductory membership rate for life, and these new low introductory rates will only be made available for a limited time. Monthly membership prices will be going up after this short introductory period ends. With these comprehensive, members-only trading strategies, I only choose high-quality, high-conviction stocks that are easily accessible, with relatively low share price values that are designed for easy trade positioning, and combined long-term trading gains are expected to far outperform the monthly membership rate of just $9.99 per month. Join now to lock in your low introductory rate and start trading stocks with the pros. Now back to the video. Here we have the 2-hour price chart for Meta Platforms Incorporated, stock ticker META. This is the Facebook parent company, Instagram, WhatsApp. Okay, so as we can see here, the stock is trading under another round of selling pressure. Not completely surprising because, as you know, I'll explain some of the reasons for this. But you know, the price moves here are again extreme, and there is a lot of caution that needs to be exercised when trading the stock right now because you know, there's not a lot of evidence here that we have actually found a bottom just yet. You know, if anybody that has been watching my prior videos, you know, I've left most of the same markings here in place so that people can kind of see where we are and to see if any of these projections, you know, turn out to be true or false. And as we can see here, you know, my prior price target to the downside was not tested. This really came in at the roughly 450, 450, just above there, and we did not quite get that far in this recent decline. The ultimate low here that came in posted at 459.50. So we were about $5 away from that ultimate downside price target. And as we can see here, you know, there's a lot of reasons to be concerned and kind of cautious, let's say that, when trading this stock, because, you know, there is a lot of gapping activity here. And this is occurring in both directions. So, you know, as we can see initially, we did see a downside price gap coming in during the July 16 trading session. This occurred again in the positive direction, although to a lesser extent. This occurred again on July 22nd. But then, you know, now once again, we're seeing another downside price gap here, which is fairly substantial in size. You know, we can see that this occurred during the July 24 trading session, and the price gap itself was more substantial than what was seen previously, both on both occasions. So we really should try to measure this a bit here. The prior candle low posted at 487.77. And then this, even if we're drawing this in relation to the high, you know, we're still showing a price gap coming in at coming into the highs at 476.40. So you know, we do have a fairly significant move here. This is more than $10 in share price gapping activity. So that's a volatile move, and it you know, encompasses or you know, engulfs, surpasses what came before it. I mean, these were much smaller price moves. You know, and what we really should be seeing here is more of a period of stabilization rather than an increase in volatility. So since that is not happening, that really does suggest that you know, an extra level of caution needs to be employed when you're trading this stock. And you know, I really think that this stock is going to start to work as sort of the canary in the coal mine as far as tech stocks are concerned this month, or you know, this trading period, this summer trading period, not just this month. You know, we could start to see similar moves like this in other stocks, and I'm thinking that, you know, currently my thinking is just that, you know, this might just be the first example of you know, just erratic, really outsized downside selling pressure in one of the mega caps, in one of the Mag 7 stocks. So, you know, we do have to remember that this, you know, this price wave lower began as the stock was making all-time highs. I mean, that alone is not normal. As you can see, the move that preceded this was almost completely positive. I mean, everything was almost in the upward direction. And then we get this sharp reversal lower just as we're hitting all-time highs. So something is clearly going on here. I mean, this is a stock that should be a much bigger story, because I do think that, this canary in the coal mine analogy might start to become valid. So currently, what we're looking at here really is a price failure at the 38.2% Fibonacci retracement. As I said in the prior video, we've sort of inverted the Fibonacci analysis here. We're actually looking at it from the downside direction rather than the upside direction. So sort of the mirror image or the picture negative of what we were looking at before. And we had to do that because, the share price activity, that chart completely broke down. That chart cannot, the prior analysis had to be revised. So we do have to start to look at this in the other direction. And as we can see here, we did get a small break above this 38.2% retracement to the top side. But this can really only be characterized at this point as a false breakout, because we've reversed lower so sharply and we've got this massive price gap here that we currently need to contend with. So, previously we did see highs of, this would have come in at 495.22, and the Fibonacci level came in just right around 491. So there was a clear break here, but this was very short-lived, and you do have a bit of an evening star candlestick formation here. I can kind of zoom in on this. It's a little bit easier to see when it's large, because this would qualify as an evening star candlestick formation, which is bearish. What you have here is a kind of a larger green candle, followed by a smaller candle with a smaller body, sort of a doji type candlestick formation, followed by a larger bearish candle with a much larger body on the candle. So you can see here it's kind of a turnaround point. Like we've got some upside movement here, we've got a period of indecision, and now some downside price movement that engulfs what was seen, the candlestick body that was seen during the prior trading session, the prior trading period, I should say. So it's an evening star pattern because it's, the sun is setting. This rally, whatever the rally is starting to reverse and head lower. It's nighttime. Things are going to start moving lower, and this is what happened. So we can see that this candlestick formation did play out as it should. And this is a failure. And, we did see a little bit of a break to the upside of this 38.2% Fibonacci retracement. But, when you see a price decline that's this massive, you have to start considering that to be a false breakout. So currently, the support level, we're looking right back at this 459.12 low, which posted during the July 17 trading session. This is now the level to watch to the downside. And given the share price activity here, I mean, you really have to side with the negative outlook at this point. I mean, there's just not much in this chart which suggests that prices are ready to bounce. And we have not yet reached my prior target here of just below 455. So there absolutely could be some more downside here to be seen. So here's the current market analysis for Meta Platforms Incorporated, stock ticker META.